The panic is no longer a rumor whispered in chat rooms or buried in message boards. It has officially reached the highest levels of the United States government. For years, we warned you that this moment would come, the moment when the people who print the money and command the armies would realize one fatal truth. You cannot print silver. We said that when the physical shortage finally hit, the government would not sit back and let the paper markets collapse. They would intervene. They would seize supply. They would secure the physical metals required for national survival. That day has arrived, and even Asian guy is here, John A.G. from Currency Archive. While retail investors were distracted by holiday shopping, while mainstream financial media talked about Bitcoin and tech stocks, the United States Department of Defense quietly executed one of the most important strategic moves in modern metals history. Around December 15th, 2025, a deal was signed behind closed doors. The ink is dry, the money is allocated, and the message is unmistakable. The United States is terrified of running out of silver. Here is the reality paper traders are ignoring. The U.S. government, through the Department of Defense and the Department of Commerce, has partnered with Korea Zinc to build a $7.4 billion critical minerals processing facility in Clarksville, Tennessee. This is not a grant. This is not research. This is the first major non-ferrous metal smelter built on U.S. soil since the 1970s. Think about that. For 50 years, America outsourced its metals processing to China and Asia. We shipped out raw ore. We imported finished product, cheap, efficient, fragile. But suddenly, in the middle of a silver squeeze, Washington drops $7 billion to bring processing home. Why now? Because they know what we know. The global supply chain is breaking. But the dollar figure isn't the most shocking part of this deal. The structure is. The Pentagon is taking a 40% equity stake in the project. Let that sink in. The Department of Defense will own nearly half the production capacity of this facility. They are not a customer. They are the owner. That means the silver, zinc, and indium coming out of this smelter will not hit the open market. It will not flow to COMEX. It will not be used to rescue bullion bank short positions. It goes straight into U.S. military stockpiles, removed from the commercial system before it's even refined. The facility will process 1.1 million tons of raw material per year, producing 13 non-ferrous metals. And 11 of those 13 are classified as critical minerals by the U.S. Geological Survey. Silver sits at the top of that list. Why? Because without silver, the United States cannot build Tomahawk missiles, F-35 fighter jets, satellites, advanced radar, precision guidance systems. In December, Washington checked its inventories. They saw China's export bans coming in January, and they panicked. They realized they were naked. This move validates everything the silver squeeze community has said for 5 years. We said silver was strategic. They mocked it as a pet rock. We said industrial demand would overwhelm supply. They called us crazy. We said the government would eventually intervene. They said the free market would handle it. So ask yourself, does a $7.4 billion government-backed smelter look like a free market to you? No. It looks like resource nationalism. It looks like crisis response. It looks like fear at the highest level of power. And when governments act like this, they are not guessing. They are preparing. Now we arrive at the most ironic twist in this entire saga. The institution enabling this historic pivot from paper to physical is the very architect of the paper suppression system itself. We need to talk about J.P. Morgan. If you believe J.P. Morgan is financing this smelter to earn a little interest, you're missing the entire point. They are not doubling down on paper. They are hedging against their own collapse. They are preparing for the death of the market they created. Understand this. J.P. Morgan is not reckless. They are the house. And the house does not stay at the table when it knows the casino is about to burn. For 15 years, we correctly called them the enemy. We documented the spoofing, the shorts, the manipulation of the COMEX futures market. But never confuse corruption with stupidity. J.P. Morgan is the most sophisticated commodity trading entity on Earth. And if the largest silver short in history is now pouring billions into physical refining infrastructure, it is because they know the rules have changed. They see the same data we do. They see the deficits. They see Chinese solar demand. They see the breakdown of the London fix. They see the Shanghai price breaking free. They know that in a world of physical shortages, paper shorts are a suicide pact. If silver goes to $200, paper shorts implode. But if you control the metal flow, you don't lose. You become the gatekeeper. This smelter is J.P. Morgan's escape pod. While they publish research telling you silver is overvalued, while they whisper sell to retail investors, they are buying the factory. They are abandoning futures contracts and securing supply dominance. And look where this metal comes from. This facility is engineered to process concentrates from Latin America, Mexico, Peru, Chile, Bolivia, potentially Venezuela. Historically, that metal went to China for refining. Now J.P. Morgan is helping the U.S. government cut China out entirely. Latin American ore. Tennessee smelter Pentagon stockpiles. And JP Morgan finances the trade, controls the flow, and likely gets first access. This is not speculation. This is vertical integration. They are reshoring the silver trade itself. And while Washington builds lifeboats, the rest of the world is already underwater. Because the real battle is happening right now in Shanghai. Let's talk about the number that is terrifying Washington. This morning, silver in Shanghai traded at 18,420 yuan per kilogram. Convert it. That's not 75s, that's 80 $80 or $80 per ounce. Right now, at this exact moment, there are two prices for the same metal on the same planet. New York, $75, Shanghai, $82, a $7 spread. In high-frequency finance, traders fight over pennies. A $7 spread is not inefficiency. It is a broken market. Shanghai is saying, we don't care about your paper price. We need the metal. This spread creates a vacuum. Any rational trader ships metal east. London vaults drain. COMEX inventories bleed. Western stockpiles evaporate. And this is why Washington panicked. They cannot compete in an open bidding war without admitting the dollar has lost purchasing power. So instead, they built a fortress. But here's the catch. That smelter won't be operational until 2029. What happens between now and then? The drain accelerates. The spread widens. The paper market loses relevance. This is the catch-22. If they suppress price, they lose the metal. If they raise price, they expose inflation. They have lost control. Paper silver is no longer a theory. The $7.4 billion receipt is the proof. If futures contracts were real, the Pentagon wouldn't pour concrete. They would buy paper and take delivery. But you can't fire a missile with a futures contract. You need atoms. And that is why physical is king. China knows it. The Pentagon knows it. JP Morgan knows it. The only people pretending otherwise are the ones still holding paper promises. So when volatility hits, when paper prices get smashed, remember who is buying behind the scenes: the most powerful military on earth, the most powerful bank on earth. They are hoarding the asset they tell you not to worry about. That is the tell. The shortage is real, the panic is real, and the squeeze is inevitable. Hold the line.